Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. It's Wednesday, it's September 27th. The market's going to gear up to open up in about an hour and 33 minutes. I've actually not getting a late start today. I've actually been analyzing the market, taking a little extra time because the market's near very important levels right now, which I will talk about in this video. I'll give you the full update. I'll give you everything you need to know to trade effectively today. I promise. Stick around till the end. Make sure to like our channel, subscribe to our YouTube channel. Go to YouTube, Roger-Scott. That's the channel, Roger-Scott. And you can find a link to my Telegram channel where you could just press a link. Go to rogerscott.com/Telegram, press a link, and you'll be signed in. I give free tips, free advice. Well, bonus tips, bonus advice, those kind of goodies for free, all in the Telegram channel. And you get pictures of my assistants, the furry ones. Lastly, my VIP room has been open for the time being. I'm not going to be keeping it open for much longer. It's getting a little too hot in there. Really sizzling hot. So make sure to join. It's at noon today, 11 a.m. tomorrow, noon today Eastern time, link above or below this video. And if you're enjoying this, if you're making money from this, if you're benefiting from this, let me know. Roger at rogerscott.com. Roger at rogerscott.com. I don't think you can forget that one. All right, let's get into today's analysis. We've got a lot to talk about. You may want to take notes because I'm on fire today. I'm wearing red. No stopping me now. All right, Nasdaq is catching a bid overnight. The global markets are basically at our tailwind. They're not giving us headaches today like they've been for the last few days. The Dow's up 85 points. This is random. I'd love to tell you this is not random, but this is very, very random, and this can dissipate as soon as the market opens if the data is bad. We've got durable goods and we've got petroleum status reports. This is an important report because it's going to tell us on new orders. It's going to give us the core capital goods, which is very, very important. And I'll talk about that in a minute. But here you could see the consensus is all over the place, but it'll be very, very important report. Now, as far as the market is concerned, I want to show you several support and resistance levels. First of all, the bond market looks like it's bottomed out here. I don't think there's any more bleeding. I think this takes into account that interest rates will be longer, stickier, and inflation is going to stay longer than we expected. Yeah, what a big surprise. I think it's pretty much done. There's just not much firepower and there's not much news there. And global markets are not jerking us around. So I don't really see too much of a downside in the bond market unless something unforeseeable happens, or maybe if the report today is really, really bad, but I'm just not feeling it right now at all. I think we're done for the time being. The Dow Jones broke through the 200-day moving average. This is very, very important. However, there's always a silver lining, right, in the market. There's a major support line right underneath it, right where we're at. Look at that. So I actually consider support levels, because they're based on actual price, not a moving average, to be more important. So to me, this support level trumps the moving average, although I'm not happy that we're below the moving average or right below the moving average. If we break this level, the odds are extremely high that we're going to go all the way down to the base, which is at 32,700, which is about 1,000 points on the big Dow, lower than we are right now. On the QQQ, we actually didn't really breach the current support level. We kind of tried to, but right now we're back in line. But there is another major support level below that right here. Just want you to know that. And after that, 200-day moving average. So there is a little bit of support that could really hold us here and cause us to come up. And also the 100-day is not as significant as the 200 and the 50. So if you don't have the 100-day on, to most folks, it looks like we just have a support level here. But we are in fact breaking the 100-day, which is not great. But my point is, we do have a little bit of silver lining here on the downside, right at the 348.61 level on the SPY, on the QQQ, excuse me. On the SPY, same thing. We clearly passed by this support level. We're broken. We're going down. But look, we stopped right there, and we're not at the 200-day moving average. If we break this, I promise you, I guarantee you, well, I can't guarantee anything. It's the market. But I'm about 95% confident that if we break this level, we are going to go to the 200-day and maybe even lower. But there is a lot of support at the 200-day. There's a lot of support right there. Look at that. Right there. I just extended this. Look at all of this. Tons. So I'm not seeing the market fall apart, go into a turmoil, nothing like that. I think it's going to hold and it's going to bounce and it's going to stay choppy. And we may get some upside, but nothing too excited for the time being. And looking at retail, you could see retail is at a major support level right now. There's not really much below there. Semiconductors, same thing. We passed this, and there's another level right here. So I'm not sure how much of a downside this will get in light of what we're seeing right now. This is good for the market. This is positive. The fact that there's so much support, technical support, is very, very bullish. Now, price action. It may or may not surprise you that over the past few weeks, you could see as soon as the market, interest rate talk, right? Look at what happens. Utilities, energy, healthcare, consumer staples, communication services shouldn't be here really. Let's look at it for the last week and see if they're still here. Let's see where communication services is right there. So look, the last 7 days, healthcare, energy, Dow, consumer staples, retail, blue chips. I'm kind of shocked that retail is all the way up here. But for the most part, consumer discretionary, tech, QQQ. You could see where all this, even communications not here. So the trend is clearly coming up in blue chip stocks over a 3-week or over the last week. You could see healthcare, energy, blue chips. Utilities, energy, healthcare, consumer staples, and then this is because Meta and Google are keeping firm. That's why communication is still here. But for those few stocks, and that's why you got to. It's much better to look at stuff without a market cap strip. What I think they should do, what I propose they do, is take out the market cap in each of the sectors and give each sector on an equal weighted basis. That would be a lot of fun. You could also see financials are up here, but you could see that home builders, consumer discretionary, industrial, basic material, those are not where you want to be right now. It's definitely not where you want to be right now. Now, home builders, same thing, support level. Retail, I think I already mentioned it, support level. We've got really strong support levels for the market, so it wouldn't be a shock for us to see a bounce for a few days. Volatility-wise, let's look at VIX and see what it's been doing. I haven't looked at it in the last few days, actually. Volatility yesterday couldn't hold it up. We're right at the 200-day moving average. In my opinion, VIX is going to come down. I think this is it, about 4 or 5 days right here. We were down here. We went 1, 2, 3, 4, 5, 6, 7, 8. That's done. We're done. There's not going to be that much more upside on the VIX here. So maybe an in the money put would be a good idea on the VIX, but don't go crazy there because volatility is still expansive. Now, yes, I said expansive, expanding, not expensive. Let me show you something. Let's take a look about, let's put it all together for you, and I'll give you some day trading stocks. But I am believing we're going to have a bounce based on technicals unless today's Fed data is really, really nasty. We're going to have earnings on Micron. Costco already came out with earnings. Costco is going to be my day trading stock for today. Oh, yeah. I'm going to show you what I think is going to happen. We're going to be watching it carefully. S&P 500, blue chips, tech-heavy Nasdaq, they all made a 3.5-month low. But, again, there's a lot of support. Synthes came out with nasty earnings. Apple fell 2%. Alphabet dropped. It was a bloodbath. And Amazon, congratulations, Amazon. You've been sued by the FTC. Here, I got a question for you. What company hasn't been sued by the FTC in the last couple of years? I'm not kidding. I'm serious. Who hasn't been sued by the FTC? I mean, man, it's getting tough out there. That FTC, they're collecting money. I want to know what percentage of what they take in goes to victims. That's all I want to know, and I'll leave it there. Tuesday, economic data on Tuesday showed that consumer confidence dipped to a 4-month low. That did not help the market. New home sales fell to a 5-month low. That is not helping the market. But none of that should be a surprise. I mean, that's what higher rates do. Higher rates erase consumer confidence, retail sales, and new home sales. It's a direct relationship. There's now almost a 20% chance that there's going to be a rate hike in November and a 31%. Here's what drives me nuts. They've been saying aggressively, we need one more hike. But this number went over the week from 40% to 30% with the long bond dropping. So I don't know how this number comes up, but I believe it. It's just very odd because if this number is declining versus inclining, then the stock market should be moving higher, and maybe it will today. But I believe, maybe I'm wrong. If I'm wrong, maybe you can correct me, someone watching it. But wasn't this number before all this mishigas began, wasn't it around 40%, right? And then the Fed said we're going to be more aggressive and pulled the rug under us, but now it's 31%. I don't understand. Makes no sense to me. But again, I don't calculate these. I'll have to talk to Garrett. He knows he knows this financial model's cold. So let's see here. Oh, the debt ceiling. Plan to prevent a shutdown on October 1st still needs to overcome gridlock in the House. Folks, it always gets solved at the last minute and nothing's going to happen. It would be too much work for them to undo it. It's just they'll get it done because otherwise it's just too much of a headache for everybody. Micron, PayX, and Jeffries have earnings today. I'll keep an eye on Micron. I'll let you know if it's running high or low. Do not hold Micron overnight. Do not hold trades through earnings. You've got core durable goods. That's coming out in about 22 minutes. We got, that's very important. We also have main U.S. durable goods order data. And I mentioned here, the consensus is negative 0.3. They're going all the way to negative 1.6. I mean, when it's like this, it can be anything, really. It's all over the place, especially the new orders. But I want to see with the core. I want to see if core orders are going up or down. That's really what the Fed is going to be looking at, and that's very important. Crude oil inventories. Crude oil has been actually doing really good. I like energies. Let's see how the energies have been behaving on a stock, on a cumulative basis. Yeah, they've been behaving pretty well. I like this pullback right here. I think this pullback is actually pretty good. I like how they're already trading above yesterday's high. I like energies right now. I'm actually going to recommend energies when we're done here. I think energies are going to rally back to the high. I really like where we're at right now. And look, we're hugging the 8-day EMA very, very nicely. Very, very nicely. I like that. Which means if the market bounces back and energies are a hot sector, you're going to see a lot of love from the energy sector. That's a relative strength play right there if I've ever seen one. I mean, that is a good relative strength play. Look, let me show you. Look at the relative strength of SPY and look at energies. Look at it on a 3-month basis. Turning up, going down. Look at it yesterday. Wanting to rally, coming down. Look at it right here. Yeah, even yesterday. It's hard to say. I mean, it's hard to say. But the point is, energies are definitely outperforming the market right now. Definitely outperforming the market. What else we got to talk about? Europe, they had 4 days of losers, but they now broke. They're up. We're getting a little tailwind from Europe. We're getting a little tailwind from China, which you could tell by the morning being higher. Japan rebounded from a 1-month low. It looks like stocks want to rebound right now. And let's talk a little bit about Costco. So Costco came out with numbers yesterday. The numbers were bad. At least Wall Street interprets them as bad. If you look at the overnight data on Costco, let's just go right here. You could see that Costco is wanting to go higher. Now, here's what I suggest you do for Costco. Let me go here. You wait for the first half hour of the day, and you buy Costco above the 30-minute high. So you measure 9:30 to 10, you look at the high, you look at the low, and then you go in. Like if this was half hour right now, if it was 10 a.m. right now, it's not. It's only 8:11. But if it was 10 a.m., you would put your buy stop at 5:45, 11. I don't know where it's going to be at 10 a.m., but you don't want to trade Costco to the short side. You want to trade it to the upside. It's a little overdone, and it's a pretty big cap. I don't know if Wall Street's going to be buying it or not, but I would love to see Costco break out to the upside and start going into the 50-day moving average to the upside. So I do believe we're going to see some love from Costco, or we're going to break down. Now, I don't want you to trade Costco to the downside. I don't. It's had pretty good relative strength to the market, and it's near swing highs. But I think the first 30-minute range is very important. So look at Costco at 10 a.m. and if it's breaking out, and if I'm not too busy, I'll send you an alert. But there may be upside move, taking it back and erasing some of these gains. This is a little too much for such a blue chip stock. Now today I promised to give you strongest actionable trades. So let me give you two. I'm going to give you two. Oceaneering or Imperial Oil, right here, or Arch. Oil, Oceaneering, Arch, or IMO. IMO, Arch, or Oil, O-L-L. Or is it O-I-I? I think it's O-I-I. Yeah, it's O-I-I. Sorry about that. O-I-I. It looked like an L to me. O-I-I is where you want to be to the long side, Arch or Imperial Oil. Personally, I like these two the best, but Arch is really good. And they're not tech. And they're very defensive, and they have really good relative strength to the market. To the downside, oh boy. I would be very careful right now to the downside. I would be very, very careful. Very, very careful. And I wouldn't make any decisions ahead of time. But one stock that I'm getting a little bearish on is Shopify. I think Shopify may have a breakdown. But I'm telling you right now, if the market starts gearing up again, it's going to go up. So be careful. Be careful to the downside right now. Be careful. There's a little bit too many stocks making 50-day lows. So be very, very cautious. Now, I'll tell you my personal choice if I had one. It would be ARK Innovations. This is a shitty stock, excuse my language, crappy stock, and I would short it. So I would short ARK, and I would go long those three stocks that I mentioned, and I gave you Costco. Now, pretty good stuff, right? Before I let you go, ready to revolutionize your trading experience? Of course you are. Well, then get ready for a deep dive into a groundbreaking tool that's set to change the way you view the stock market forever. This is exciting stuff. That's why I'm wearing red today. Discover the magic behind simple green and red arrows and leverage the enigmatic dark force that's behind the move of so many stock. I said it. Enigmatic. I said it. No more sniffing through technicals or chasing news updates. That way you can enjoy life's best moments. Confident that your investments are working smarter, not harder. It's not just a strategy, it's a transformation approach to trading. It's all going down at 4 p.m. Eastern Time today with the world premiere of Celeste Lindman's brand new trading strategy that's all about following the dark force at play on Wall Street. Clicking on the link below and join Celeste right after the market closes today for all the juicy details. I'll talk to you later. If you have questions, roger@rogerscott.com. Post below the video. I respond. Boy, that's 17 minutes I took of your time this morning. I'll see you later. I'll see you at noon in the VIP room. Don't miss out.